Nvidia came out with its earnings this week, and it was something that every investor was closely watching. The AI bubble fears had hit the Wall Street, and the tech stocks were in a full sell-off mode, with Nvidia falling over 7% in 5 days before the earnings call. But the AI giant came out with better than expected earnings, even as it failed to give Wall Street a relief from crashing later in the day. At least it managed to keep it in green for a short period. What was said on the earnings call? Here's a report.
Nvidia just delivered the kind of earnings that make AI bubble talk sound premature, but not entirely disappear. In its latest quarter, the company reported record revenue of about $57 billion, up 62% year-on-year, with its data center business alone contributing roughly $51.2 billion as cloud giants kept racing to buy its AI chips. For the current quarter, Nvidia is forecasting around $65 billion in sales, plus or minus 2%, well ahead of analyst expectations and paired with a fat adjusted gross margin guide of about 75%, signaling it expects demand and pricing power to stay very strong. On the earnings call, CEO Jensen Huang directly tackled the AI bubble question, insisting that from Nvidia's vantage point, something very different is happening. He argued that companies worldwide are shifting from traditional CPU-based computing to accelerated computing and AI, and that Nvidia is in every cloud, from hyperscale data centers to on-premise servers, edge devices, robots, and PCs, all built around one architecture that developers already know how to use. Huang also reiterated that Nvidia has around $500 billion worth of bookings for its advanced chips through 2026, framing the current surge not as speculative froth, but as the early innings of a long-term infrastructure build-out. The immediate market reaction was euphoric. Nvidia's stock jumped about 5% in extended trading, putting the company on track to add roughly $220 billion in market value in a single move, and reversing some of the nearly 8% decline it had suffered earlier in November on bubble worries, after a 1,200% surge over 3 years. The strong numbers and bullish outlook spilled over to peers too. However, those AI bubble jitters existed for a reason. Nvidia's valuation has rocketed as its chips became the must-have ingredient for generative AI, while cloud titans such as Microsoft and Amazon poured tens of billions into data center build-outs and extended the depreciable life of AI hardware, prompting fears that profits were being flattered by accounting and that chip orders were running ahead of what end users could actually absorb. Investors also worried about a circular AI economy, Nvidia investing heavily in AI startups like OpenAI and other firms that in turn become some of its biggest chip customers, as well as the growing concentration of Nvidia's own revenue in just a handful of hyperscale buyers. That is why, despite the blowout quarter, analysts warn the calm may be temporary. Some on Wall Street still question whether AI infrastructure spending can grow at this pace for years without a pause, especially given rising physical constraints such as power, land, and grid access that could slow new data center deployments. Nvidia's business is also highly concentrated. 4 customers now account for more than 60% of sales, and it is largely locked out of China by US export curbs, forcing it to chase new growth in regions like the Middle East, even as regulators scrutinize its dominance.
If you like this video, then like, share and subscribe to ET Now.